What's up, guys? So in my video where I talked about whether or not the price of Pulsechain or PulseX will do a 10,000x within 2 years of launch, one of the most frequent comments was regarding market cap. This comment is from BJM 2016. PulseX market cap is 1.1 billion. A 50x is a $50 billion market cap. Unlikely that PulseX will do a 50x, maybe a 10x max. Market cap shows how much money is invested and places the coin on its rightful spot on the leaderboard, and no amount of lies can change that. A 350x in PLS would put PulseX above Bitcoin and make PulseX the king of all crypto in the #1 spot. And that's not going to happen, so therefore we will never see a 350x for PulseX unless BTC enters the trillions in market cap. Okay, so Richard Hart owning 90% of the supply should mean that PulseX is so scarce that it's worth $100 on day one. But we all know it won't be worth that, so him owning 90% means nothing. Ask him why he doesn't burn the coins he owns. He will never answer. If he has no plan on using the coins, he should destroy them. BJM, thank you for giving your input. In order to decide whether or not these are good investments, these things have to be considered. Let's break it down. So market cap shows how much money is invested and places the coin on its rightful spot on the leaderboard, and no amount of lies can change that. So that actually is not true. The market cap does not show how much was invested. So for example, if you look at Bitcoin, which had a market cap at the all-time high of $1 trillion, it does not mean $1 trillion cash was invested into Bitcoin. The market cap is the total supply times the price of the last order filled. Richard Hart gives an extreme example, and obviously it's not practical, especially in projects like Bitcoin and Ethereum, but it does bring out the point that the market cap is not determined by how much money was invested. The example is if you have 1 billion rubber duck coins, you have 1 billion rubber duck coins, and you go onto Uniswap, let's say, you put a sell order of your rubber duck coin, of 1 rubber duck coin, you put a sell for $1. If that sell is filled, you know what the market cap of the rubber duck coins is? It is $1 billion. So if after that rubber ducky is sold for $1, the next buy order is at a cent, after the second sale of the rubber duck coin, the market cap will go from 1 billion to 10 million. And that is what's known as slippage. So when the order book on an exchange is thin, meaning there are very few buys and asks, buying and selling pushes the price up or down considerably. It is very volatile. Even though you sold $1.01 worth of rubber duck coins, the market cap went from $1 billion to $10 million in 2 transactions. Obviously, this is an extreme example, but the overall point remains. Market cap is not determined by the amount of money that was invested. And in fact, if you go to charts.woobl.com/Bitcoin-gains per dollar invested, if you go to the Bitcoin market cap gains per dollar invested, you can see exactly how much $1 invested affects the total market cap. And it's not 1 for 1. So if you look at in 2010, if you put in $1, then you move the total market cap up by $2. So if you put in $1, then you moved it up double. Then if you go to 2012, you're already at the point where if you put in $1, then you move up the market cap by $7. And then if you go to 2014, it's 10 to 1. And at this point, we're about $11.50 moved up in the market cap per dollar invested. So 350x in PLS would put PLS above Bitcoin and make PLS the king of all crypto in the #1 spot. And that's not going to happen. So therefore, we will never see a 350x for PLSX unless BTC enters the trillions in market cap. If you look at Hex, when Hex was at its all-time high, it had a $280 billion market cap. And Ethereum had, at that time, maybe a 500 billion market cap, which means that Hex, which was only around for 2 years at that time, was only a 2 or a 1.8x away from flipping Ethereum and being the second biggest market cap in crypto. Flipping Bitcoin within 2 years sounds a little much. I mean, Hex couldn't even do that, and Hex did 10,000x. So I don't see Pulse or PulseX flipping Bitcoin and Ethereum within 2 years. But the idea that it can't happen because the the market cap is too high is a little bit silly. Let's say 85, 90% of the supply is in the OA and that's never going to get sold. All those coins are going to be factored into the equation of market cap. Now, you might say that coin market cap is not going to rank it there. I could see a scenario similar to Hex where, coin market cap, CoinGecko, and like these mainstream ranking sites that are tied to exchanges and things like that aren't going to list it at its proper market cap. But the idea that it is not able to surpass the market cap, I don't see why not. Hex came very, very close in 2-3 years. So the idea that Pulse and PulseX can't do the same when they are great projects, they have product market fit. We've seen layer ones and we see the gains that they can make. Pulse and PulseX being legitimate projects that are onboarding a considerable amount of the users on Ethereum because they're airdropping the free tokens. I don't see why it can't flip Ethereum and Bitcoin over a long period of time, meaning over 5-6 years. Richard Hart owning 90% of the supply should mean that PulseX is so scarce that it's worth $100 on day one. Richard Hart owning 90% of the supply only means that the circulating supply, assuming that Richard Hart is not going to sell, that means the effective circulating supply is 90% less than the total supply. Okay, but we all know that it won't be worth that. So him owning 90% of the supply means nothing. I mean, I guess, yeah, it doesn't really mean much. It's good. It means that there is less of a supply, which is good. Ask him why doesn't he burn the coins he owns. He will never answer. If he has no plan on using the coins, he should destroy them. Okay, so that's actually a very interesting point. I don't know if he will never answer. I don't know if he was asked. If Richard Hart tells you what he's going to do with the 90% supply of PulseX, that will give you expectations, which in turn can put it in consideration for being a security, which is something that neither us nor Richard would want. So he can't tell you what he's going to do with the coins. But the best thing I could do is speculate. Just being the founder, you would want to be number one on the leaderboard just for bragging rights. It's just cool to have the wallet with the most of that asset. You should have the highest net worth, being that you're the founder. Another possibility is that there may be some time in the future where the OA would want to take a loan against it. Let's say it's worth hundreds of billions of dollars. You just have to take $1 billion and take a 5% loan, which means there's no margin call unless there's a 95% correction. And if it's a mature asset, then at that point, it's unlikely that there will be a 95% correction. That is $50 million that the OA could extract in cash, tax-free. There is always the possibility of needing money in the future, and maybe the OA would want to sell a small amount. So, there's just endless possibilities that you could speculate on as to why the OA wants to own a certain amount. In the case of Hex, it makes a lot of sense because he could set the interest rates, being that it's a 3.69% inflation. How much the OA stakes would determine how much the rest of the stakers get. The fact that the OA is only staking 10% of the Hex supply allows everyone else to get a very high interest rate. As to why the OA wants to own so much. Someone could ask Richard, I know he answers a lot of questions on the OA, and there are a lot of questions that he doesn't answer. A lot of it, you're dealing with regulatory issues that could come up in these situations. So it's a very gray area. It's very unclear. To conclude, I would say I think the idea that the market cap cannot go up because it would be too high. This idea is really mostly based on this misconception, I would say, that the market cap is the total amount of money invested. It's not. So Hex was able to get a market cap of 280 billion, and it was able to come within a 2x of flipping Ethereum and a 4x of flipping Bitcoin. So this idea that Pulsechain or PulseX for that matter cannot do the same over a long period of time is just simply not true. It's simply not true, especially considering the fact that they have a community focused on onboarding, low liquidity, and the fact that they are great projects with product market fit. If people want to buy it and the people that bought it don't want to sell it, then the price could go up forever. Yes, if you're sitting on billions and billions of dollars, you might not be able to extract much liquidity in a short period of time, but the idea that the market cap can't go up to infinity is just simply not true. Just who would have ever imagined Bitcoin having a higher market cap than the overwhelming majority of stocks in the S&P 500? This just proves the fact that market cap is in fact a vanity metric, and it's never stopping the price of going up. I hope that sheds some insight. Give the video a thumbs up and subscribe, and feel free to leave a comment. I generally enjoy engaging with the comment section and seeing what you guys have to say.